All right, as a group, growth stocks are outperforming so-called value stocks this year. It's good for growth investors, but does it also tell a bigger story about valuations and the economy? Welcome to Trading Nation. As always, I'm Brian Sullivan. Thanks for joining us. Erin Gibbs with S&P Global, Max Wolff with 55 Capital, your Trading Nation team today. Erin, does it tell a bigger story about what the economy is saying, or are people simply going where the earnings growth is going to be?
To me, when you look at this, not just of the Russell 2000 growth versus value, but when you look across different asset classes, there's a clear preference for growth, whether it's looking at large cap that has higher growth than small caps, or your growth versus your value, obviously having higher growth. That's where investors are putting their money. And so we see these big differences of higher returns for the year, all based off of these growth rates, and they're pretty higher correlated. And when you look at even the Russell 2000, which actually has a lower expected earnings than the S&P 500, that valuation has actually declined year to date, whereas the S&P 500 expanded. So we really see this trend across the board.
Yeah, and do you expect it to continue, Erin?
Well, the earnings numbers so far have come in very much with what expectations are, and we're seeing sort of the same pattern with investors. So far, so good. We're seeing higher growth, and investors are still pushing up the market. So yes, I don't see any catalyst for change just yet.
All right, Max Wolff, when you look at this, again, same question to you. Do you see it as any kind of a sign of economic expectations, or more just sort of valuations and nuances in the stock market?
Yeah, so we think it's partially being driven by this major move to passive investing. And what we're seeing in part is that it's actually a small number of stocks that are getting everyone excited. And everybody's investing in these market cap weighted indexes. So we're kind of pulled by this giant gravitational force of these huge mega cap growth companies, which is where the money flows, which then get a bigger portion of the indexes, which is where the money is flowing. So we do think it's kind of a heavily momentum driven. That being said, I do think that the world right now feels like the safest, best place to be is big, established American growth stories, and so those are kind of running away with the basic cash game, and I don't see that changing in the near future. The thing that's interesting is the big feeling was after November that we were going to get new leadership and new laggership. That lasted a month or two, and then starting March 1st again, really heavily went back to the same old leaders we've been watching for 8 years, and I do think we're probably not in the early innings of that, but it doesn't look set to change in the near future either.
All right, Max Wolff and Erin Gibbs, we appreciate it. And Max, I guarantee you a future segment on this program will be the risk toward everybody moving into a few stocks in ETFs, but that's not for this segment, but it will be coming up soon, I'm sure. Max and Erin, thank you. Folks, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you again.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.